Everyone is a genius in a bull market, but when the tide goes out, you see who's been swimming naked. Crashes are not a possibility. They are a certainty. They don't send a warning. They just arrive. And most investors, they never see it coming. They're too busy chasing yield, watching TikToks, or trusting that the past will repeat itself. But you, if you're watching this, you're different. You're not here for quick profits. You're here to build lasting wealth, wealth that survives storms. So today, I'm going to show you the 7 timeless principles that separate the amateurs from professionals and the rich from the ruined. Let's begin. The biggest lie in finance? That someone out there can predict the next crash with accuracy. Warren Buffett doesn't do it. Howard Marks doesn't do it. Even Ray Dalio only builds systems to prepare, not to predict. Because investing is not about knowing what happens next. It's about being ready when it does. You can't predict. You can only prepare. Howard Marks. That's why true professionals build anti-fragile portfolios. They don't wait for signs of trouble to prepare. They assume it's coming. Think of it like a pilot. Before every flight, he checks the parachute, not because he expects to use it, but because the cost of not having it is catastrophic. Preparation is not paranoia. It's responsibility. And that brings us to the next truth. In bull markets, holding cash is mocked. You're missing out, they say. Cash is trash. But in a bear market, cash is king. It buys freedom. It buys assets. It buys peace of mind. Having cash in a crisis is like having oxygen in a fire. Morgan Housel. Cash is not about fear. It's about optionality. In 2008, the people who had cash bought prime real estate at 50 cents on the dollar. In 2020, they bought tech giants at half the price. In every crash, those with cash move from victims to predators. Imagine this. When the world is on fire and everyone else is forced to sell, you'll be ready to buy. So, if you're fully invested all the time, ask yourself, are you prepared to seize an opportunity or just to survive? Let's keep going. In good times, people chase complexity. They build layered portfolios, use leverage, buy structured products they don't fully understand. But when volatility hits, complexity collapses. You don't rise to the occasion. You fall to the level of your systems. Simple strategies, like a core ETF allocation, balanced diversification, and clear rules, outperform when everything is burning. Simplicity doesn't mean low performance. It means clarity. And clarity is priceless when fear takes over. Remember, you don't need to impress anyone with your portfolio. You need it to survive, compound, and serve your goals. Diversification is like having multiple lifeboats. Some might get hit. Others will stay afloat. When the dot-com bubble burst in 2000, those holding only tech lost it all. But those with exposure to bonds, value stocks, and real assets preserved capital, and were ready to reinvest at the bottom. Survival is the only road to riches. Peter Bernstein. Diversification gives you time, and time gives you power. Don't confuse diversification with diversification. It's not about owning everything. It's about owning uncorrelated things, the kind that don't all sink at once. It's about designing a portfolio that can breathe, no matter the climate. People obsess over returns, but in a crash, return means nothing if you can't access your money. If you're locked in long-term positions, private investments, or illiquid assets, you might watch your portfolio bleed without being able to act. Liquidity is the difference between paper losses and permanent ones. Liquidity gives you control, and in a storm, control is everything. That's why smart investors always keep a portion of their portfolio in highly liquid assets. It's not about yield, it's about flexibility. Liquidity is not glamorous. But in a panic, it becomes your lifeline. The charts don't kill your wealth. Your panic does. In 2008, people sold everything. In 2020, they fled the market at the bottom. In both cases, those who stayed calm became rich. In investing, your biggest enemy is not the market. It's yourself. Create rules. Automate contributions. Set rebalancing dates. Train your emotional muscle before the storm hits. Your real performance will not be defined by spreadsheets, but by self-control. Because when everyone else is screaming, the investor with clarity wins. Let's look at the final principle. Crises distort time. They make people obsess over the next hour, the next day, the next headline. But the market rewards those who look decades ahead. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. Wealth doesn't come from reacting. It comes from compounding through every cycle, including the painful ones. You don't have to do extraordinary things. You just have to stay in the game longer than others. And that requires vision. 2008, global financial crisis. Lehman collapsed. Panic everywhere. The S&P fell 57%. But within 5 years, it was making all-time highs again. 2020, COVID crash. Entire economy shut down. The market dropped 34% and recovered in 5 months. 2022, inflation shock. Tech stocks down 60%. Interest rates spiked. Yet those with diversified portfolios and strong cash positions re-entered at attractive prices. In every case, those who panicked paid. Those who prepared prospered. The cycle repeats. But your reaction can evolve. You don't need to be the smartest investor. You don't need to time the market perfectly. You just need to be ready. To hold cash when it feels wrong. To stay calm when the crowd panics. To play the long game when everyone else is chasing noise. The next crisis will come. Not maybe, not if, but when it does, you'll have something most people don't. Conviction. Because you're not building wealth to impress. You're building wealth to endure. And that, my friend, is what makes you truly rich. This channel is not for everyone. It's for thinkers, builders, investors who play the long game. If that's you, subscribe for weekly insights that go beyond the noise. And if this helped you see money differently, leave a like and share it with someone who's ready to be smarter before the next storm hits. This is Rich Mind Lab, where we don't fear crises, we prepare for them. Because true wealth isn't measured in dollars, but in discipline. And if you made it this far, one thing is clear asterisk. You're exactly where you need to be.